Yeah, joint venture, right? For today, I'll just talk about only this one because we don't have time. So, joint venture is another type of business organization. We have various type of business organizations. There's a sole proprietary organization, there's a partnership firm, and there is a joint stock company. Now, in case of joint venture, there may be two companies running in their respective course of business, and two companies, two may be joint stock companies, two may be partnership companies. Two companies come together and take up a venture. A venture is a temporary endeavor, okay, for a particular purpose. They form as a joint venture. A venture is a project. A project is temporary endeavor. Okay, let's say construction of an airport, construction of laying a highway, national highway. Okay, let's say from Hyderabad to Suryapet, laying highway. So these are all ventures or projects. They are temporary. Once that project is complete, then this joint venture will be dismantled and they will settle the scores. They will settle the accounts and distribute the profit among themselves or between themselves. If it is two, it is between themselves. Can you please mute yourself no, so that the recording does comes properly, clearly? If you are unmuting, the record will be breaking. Okay. So now there are methods today. I'm just showing you where when there are no separate books, set of books maintained, okay, by the co-venturers in a joint venture, two companies come together, or three companies come together, or four companies come together. Whoever is coming together is known as co-venturer. Co-venturer to what? To the joint venture. Sometimes it may be two companies form together and give a common name. Let's say World Frame and Tatas came together and they formed Voltas. Okay, they have created a new name, right? So parties to that joint venture are called as co-venturers, and these co-venturers pool in the capital. Okay, and yeah, the yeah under this method, each venturer or co-venturer will record his own transactions, okay, and that of other co-venturers, okay, his transactions and other co-venturers transactions relating to what? Relating to the capital, relating to their expenses, relating to their contribution in the form of service or in the form of material that they are supplying. For example, let's say what is this? Bharti Cements. Bharti Cement has it's into cement business. Bharti Cements, and if it is taking up a project, a construction project, or laying road project, cement road, white top road project, uh, let's say they supply material from their own company. There is another company that's called GMR. GMR may be, completely into the infrastructure management. So GMR or GVK, they are, specialized in infrastructure companies management, and they take cement from Bharti Cements and they form together. You have cement, I have skill to construct the company, I have a skill to construct the airport. So let's form together, right? You supply the steel, you supply the cement for all the project, the whole project, and I will supply my engineers, my skill, my my architects. It is like this. It's a joint venture. So each venturer will prepare his own account and other co-venturers, okay, account relating to the material they are supplying, the skill they are providing, okay, the time they are spending for anything. Okay, for instance, there are two ventures. This is what I have explained to you, this example. Now, joint venture account. The first account is joint venture account. We prepare Each venture up will prepare accounts. The first account to prepare is joint venture account. Now look at this. It should be prepared like the previous one. Okay. Uh, it shows the profit or loss out of this joint venture, right? And the profit or loss at the end of the venture is transferred to co-venturers capital account or venturers capital account. Okay, venturers capital account. But in this case, one's own share of profit or loss should be transferred to profit and loss account, but co-venturers share of profit should be transferred to personal account. Okay. Now, second one, since this is a personal account of the co-venturers, his account will be debited with the amount of goods purchased, expenses incurred, profits so earned, etc. Okay, the balance of this account will go to either balance sheet or the same will be present in the final payment and receipts between the co-ventures. Now these are the transactions journal entries. When transactions are taking place, you have to give the respective journal entries. Look at this. This is important. This is very important. Now, when goods are supplied by A, remember we are not preparing uh, we are not preparing uh, uh, the accounts separately. The co-venturers books are not prepared separately. Okay, now the condition is, yeah, where no separate books are maintained. Under this clause we are writing these journal entries. Okay, when there is no separate books of accounts are maintained. Okay, right, let's come to these journals. When no separate books are maintained and when goods are supplied by A, okay, let's say there are only two venturers, two co-venturers, A and B, A and B. When goods are supplied by A, right, joint venture account debit to purchases account in the books of A. In the books of B, joint venture account debit to A's account. Next, when expenses are paid by A, joint venture account debit to cash account in the books of A. But in the books of B, joint venture account debit to A's account. When goods are supplied by B, in the books of A, joint venture account debit to B's account, but in the books of B, joint venture account debit to purchases account. Okay. Next, when expenses are paid by B, okay, in the books of A, joint venture account debit to B's account, and when it is B's books, joint venture to cash. Okay, now when cash is contributed by A, okay, joint venture account debit to cash account, okay, and in case of B's books, joint venture to A's account. And similarly, when cash is contributed by B, joint venture to B in the books of A, in the books of B, joint venture to cash. Now, when bill is drawn by A and accepted by B, bill receivable to B in books of A, in books of B, A's account debit to bill's payable account. Okay. When bill is discounted by A, cash to joint venture in the books of A, in the books of B, joint venture to A's account. When commission is allowed to B, joint venture to B's account in the books of A, in books of B, joint venture to commission account. When salary is allowed to A, okay, joint venture to salary account in the books of A, in the books of B, joint venture account debit to A's account. When goods are sold by A, in the books of A, cash to joint venture In the books of B, A's account debit to joint venture. Okay. And similarly, when credit sales are made by A, sundry debtors to joint venture in the books of A. In the books of B, A's account debit to joint venture account, joint venture account. When bad debts are arise for the bad debts, joint venture to sundry debtors in books of A, in books of B, joint venture to A's account. Okay, for the sales made by A and they have turned to be bad debts. When for closing stock taken over by A, the leftover stock is taken over by A. For that, in the books of A, purchases to joint venture. In the books of B, A's to A account debit to joint venture account. When joint venture shows profit, joint venture account debit to B in the books of A, but in the books of B, joint venture to A's account. Okay, right. When joint venture shows loss, profit and loss account debit to B's account in the books of A, and same is profit and loss account debit to A's account. Okay. And to joint venture account in the books of B. This is the summary of all the journal entries. If you know these journal entries, then you will be able to work out this solution. Okay, you will work out this. Now, how do you remember, sir? How to remember this? How to remember these many journal? It is, you apply the logic, you will be able to remember. For example, in the books of A, goods are supplied by A. To whom? To the joint venture. Joint venture is taking benefit, joint venture account debit. Who is supplying? A is supplying. In the books of A, you cannot write to. Credit the giver, na? The giver is A. In the books of A, you cannot write A. So you will write two purchases. Okay. Then in the books of B, yeah, joint venture account debit to A's account, because it is in books of B. It is in the books of B. It is in the books of B. Right? So therefore, we gave the name of A. So this is how you have to logically understand. And similarly, for expenses paid by A, okay, joint venture to cash. In the books of A, you will not write A, but write cash. But when it comes to B's book, you will write same thing, joint venture account debit to cash, because it is B's book. In B's book, you can write A's name. In A's books, you will write B's name. But in your own book, you cannot write your own name. Okay. And similarly, when expenses are paid by B, okay, joint venture to B, you're writing the name of B in books of A, but not writing his name in books of B. Okay, but writing here cash. Right? So cash is contributed by B. Joint venture to B, you're writing in the books of A, you're writing name of B, but not in the books of B. In the books of B, you're writing cash instead of B's account. This is how you have to go on analyzing. Okay. Now, please do let me know if any doubt here. I will clarify. I will just hold this for a few seconds or minutes, then clarify your doubts. Please let me know. Yeah. A and B were partners in a joint venture, sharing profits and losses in the proportion of 60 and 40 respectively. A and B are co-venturers to each other. A supplies goods to the value of 10,000 and incurs on freight 500. B also supplies goods to the value of 8,000 and incurs 400 towards freight and other incidental expenses. B sells the entire stock of goods on behalf of joint venture for 25,000. B is giving his stock. No, B is selling the stock, sorry. B is also entitled to a commission of 5% on sale. So B is responsible for sales of joint venture. That's what we understand. And he sold the stock of joint venture for 25,000. B is also entitled to a commission of 5% on sale, 5% on 25,000. B settles his account by remitting a bank draft. Okay, he gives a draft. So therefore, you will write my bank or whatever. So write the journal entries. Okay, write the journal entries. Now, what is the first thing to do? Look at this. What is the first thing? When goods are supplied by A, what's the entry? Now, in books of whom is asking both A and B. Okay, like we will look at A. Yeah, in the books of A. When goods are supplied by A, joint venture account debit to purchases. Okay, now joint venture account debit to purchases. Right? And how much? A supplies goods. Okay, 10,000 and freight 500. Okay, so joint venture account debit to purchase account 10,000. He supplied material and 500 he paid cash or issued check, or he was bearing the expenses. So 10,500 is your joint venture account debit. Okay, next, this is the first one, right? This is the first one, when goods are supplied by A. When goods are supplied by B, we'll look into that also. Joint venture account debit to B's account. Okay, what is that? B also is supplying 8,000 and 400. So this is same. Joint venture account debit, okay, to B's account and bank account. 8,000 and 4,000. Here it is written directly, but it is 8,000 and 4,000, right? So 8,400. Next. Goods supplied is over. Expensive. When expenses are paid by A, joint venture to cash for A. Joint venture to cash. Joint venture to, where is this one? Expenses. Where are the expenses? There are no expenses here. There are no expenses. B also supplies goods to 8,000 freight charges. B sells entire stock. There are no expenses here, right? Can you see any expenses here? There are no expenses. Okay, there are sales. B sells on behalf of the entire joint venture. Okay, so B sales. When yeah, when goods are supplied, also expenses over, when cash is contributed, when uh, sales, where is sales? Where are sales, ma? Where are sales? Goods, expenses, goods supplied by B, expenses paid by B, cash contributed, when bill is drawn, when bill is discounted, commission allowed. Goods sold. When goods sold by A. Okay, in this case, goods sold by B. Okay, goods sold by B. In the case of goods sold by B, yeah, when when goods are sold by A, cash account debit to joint venture account. In the books of B, A's account debit to joint venture. Now, goods are sold by B. So here it is cash to joint venture, and here it is B's account debit to joint venture account. Look at that, is what you can see here. B's account debit to joint venture account. B's account debit to joint venture account. 25,000, 25,000. Okay. And what else? B is also entitled to a commission of 5%. 5% on 25,000. How much? 10% is 2,500, 5% is 1,250. Okay, for commission, look at this. For commission allowed to, when commission is allowed to B, Okay, joint venture to B's account, joint venture to B's account, joint venture account debit to B's account, 1250, 1250. Okay, right. Then we will come back to this. Okay, afterwards, look at this. We prepare a joint venture account in the books of A. In the books of A, we will prepare joint venture account. Okay, now let's take from this table journal. Joint venture account debit to purchases to bank. Joint venture account debit to purchases to bank, 10,500. Again, there is one more. Joint venture account debit to bank account. Joint venture account debit to purchases and to bank account. Right? Joint venture account debit to purchase and bank account. Put together, he has written 8,400. Okay. There is one more. Joint venture account to B's account. Joint venture account debit to B's account, which is commission, 1250. Okay. Now there are sales. There are sales of 25,000. B's account debit to joint venture account. Right. So in joint venture, B's account is credited, 25,000 sales. Right. On credit side, the total is highest, 25,000. Highest total is dropped on the opposite side also, 25,000. From this 25,000, deduct 1250, 84, 10,500. 10,500 minus 10,500, 8,400, 1,250 should be deducted from 25,000. Deduct, reduce.
Calculator not there, sir.
క్యాలిక్యులేటర్ లేకుండా అకౌంట్ క్లాస్లో కూర్చుంటారా ఎవడన్నా? ఎగ్జామ్ కూడా అట్లనే వెళ్తారు అనుకుంటా, అందుకే నేను మార్కులు వస్తున్నాయి, సింగిల్ డిజిట్ మార్క్స్ వస్తున్నాయి. క్యాల్కులేషన్స్ క్యాల్కులేటర్ లేకపోతే ఇలా రా, భయం లేదురా, అది సంగతి. అస్సలు విషయం ఏంటంటే మనకి భయం ఉంటే అన్నీ వచ్చేస్తాయి పరిగెత్తుకుంటూ. మనకి భయం ఉంటే చాలు, అన్నీ వచ్చేస్తాయి అంత స్పీడ్గా. నేను చేస్తున్నాను మీ బదులు. ఏం చెప్పాలి నేనన్నా? 8,400 ప్లస్ 1250. ఎగ్జామ్లో నేను చేయలేను కదా, ఇప్పుడు చేస్తున్నాను, ఎగ్జామ్లో చేయలేను కదా.
నెక్స్ట్ క్లాస్ నుంచి పెట్టుకొని ఉంచుకుంటా సార్.
మంచిది. నువ్వు బయటపడుతున్నావురా, నీ ఒక్కదాని దగ్గర అనుకున్నావా? అందరి దగ్గర లేదు క్యాల్కులేటర్. 4,850 వస్తుందన్న. ద డిఫరెన్స్ ఈస్ 4,850. ఓకే, it should be divided into 60-40 na, 60 to A and 40 to B. Okay, 60 by 100. 60 by 100 gives you 2,910, 2,910. Okay, and the remaining is 40%. 1940 is 40%. Okay, B gets 1940, which is 40% of the profit, and A gets 60%, which is 2,910. And write the entry. Now you write the entry. Joint venture account debit to profit and loss account. Okay, B's account. This is what? Where is that? Yeah. Joint venture account debit to B's account. Okay, 1940 to profit and loss account, 2,910. Okay, 2,910 is your profit. So therefore you will transfer it to profit and loss account. 1940 is due to B. Okay, 1940 is due to B. Right? So then finally close the account. Now come to B's account. co-venturers account you're preparing. So B sold 25,000 worth goods. B's account debit to joint venture 25,000, right? And what B did, what B did, he gave material and expenses of 8,400 to joint venture. Okay, and he is due to receive 1250 commission, right? And he is due to get a profit of 1940. So you deduct all these things which B is due to receive. B is supposed to receive 8,400 for materials, 1250 towards commission, 1940 towards profit. Deduct all these things from what he has sold. So he sold goods for 25,000. Deduct all the dues to him. You will get 13,410, which is to be settled. So the amount due to receive is 13,410. 13,410, right? So B's account, in B's account by bank, you're writing the entry is, the journal entry is bank account debit. Okay, this is the amount to be received to B's account. B will pay this much amount. B will give this much, and the same is deposited into bank. That's it. In the books of A, same way you will do in the books of B. In the books of B also you will do same procedure. Okay. Doubts,
Okay, sir.
please. Doubts, please. Yeah. Right. Yeah. In the books of A, we have done, and in the books of B. Okay, journal entries in the books of B. For the material supplied and the expenses he has incurred, okay, joint venture to A's account 10,500. Right? For the material you have supplied for 8,000 and the amount you have spent 400, put together 8,400 is joint venture account debit to purchases and to bank. And for the sales you have made, bank account debit to joint venture account 25,000. Okay. For the commission that you are due to receive 1250, that is 5% on this 25,000 is 1250, right? Joint venture account debit to commission account 1250, 1250, right? There's a profit due to A, so 2,900, and your own profit 1940. The entry is joint venture account debit, okay, to A's account 2910, to profit and loss account, your own profit 1940, right? Then what is the total amount due to A? A's account debit 13,410 to bank account. How do you get this amount? You get this amount like this. Yeah, look at this. Joint venture account debit to A's account 10,500, joint venture to purchases 8,000, joint venture to commission 1,250. Okay, joint venture to expenses 4, joint venture to commission 1,250, right? And you sold goods 25,000 worth goods. You means B, right? From this 25,000, deduct 10,500, 8,400, 1,250. Okay, you will get some amount. That the amount is divided into 60% and 40%. 60% belong to A, which is 2009-10. 40% belong to you, that is 1940, right? So let's come to A's account. A's account, when you look at A's account, A has spent 10,500 by joint venture account, 10,500, and his amount of profit earned during the year 2009-10, the total amount due to him is 13,410. So you give an entry to bank account. That is, you will pay, you will issue a check to him for settlement 13,410. Right? That's the end of the solution. 13,410, 13,410, end of solution in the books of B. I think it is clear. If it is not clear, please ask me question.